Good morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. You're all watching BQ Prime, and it's a slightly different Friday in that unlike the last few days, the cues not necessarily very supportive, but not too bad. Let's take stock of it. First, Fed officials offered mixed signals on the size of the September rate hike, which is actually not bad news because frankly, everybody's now prepared for a 75 basis point, so to say, and then maybe some reductions. But let's see, maybe we'll get a clearer idea, viewers, next week when Jerome Powell speaks at the Jackson Hole Symposium. So let's wait for that. But the issue is that the US dollar, the dollar index has popped. There is news that Xi Jinping and Putin are planning to attend the G20 summit in Indonesia, and that led to the dollar index really shooting up 107 or thereabouts. We'll get that in a moment for you. Oil is set for the weekly loss, but because of slowdown in US demand. But keep in mind that there is a bit of an uptick there from yesterday's session. And at the end of the trade setup, I get the views of um, Christopher Wood on oil and gas. He's got a very interesting view. We'll get that as well. Back home in India, Reserve Bank of India says that the policy is oriented towards cooling prices. So predominantly, the fight remains, or the focus remains, inflation and not growth. And EM Jayashankar has said that India-China relationship is going through an extremely difficult phase. Well, this is no doubt exacerbated by what China has done in the port of Sri Lanka, wherein they've docked a military vessel there, which is certainly not certainly not cool with India and for the right reasons. There is certainly a bunch of issues out there between India and China, least of all what's happening in the Indian Ocean side. I mean, China is flexing its muscles across the whole Southeast China Sea and the Indian Ocean, and that's not cool from an India perspective. Frankly, um, you and I both know India isn't um, a small state which will take everything lying down. So yeah, but there is an issue at hand. Is that impacting markets? Maybe not so much, and we'll get to that SGX Nifty in a moment. The U.S. markets though had a decent day. About, I mean, you could say 0.25%. The futures were okay too, but like I said, the other cues and predominantly the dollar index is an issue. As you can see, 107.51 for the dollar index now. Yields too inched up to 2.89. So on both those counts, not too much out there from a positive cue to take home from. Keep in mind, the index is trading high, and therefore the SGX Nifty should be showing a mild red today, if you will. I think I'll be surprised if it's a big green or otherwise. Yeah, about 43 odd points, so not surprising there. Just that the quant indicators do indicate that now the risk rewards are getting a bit stretched from a long perspective. Let's wait and watch. The trade setup, the good part is, or from a bull's perspective, that never mind what everybody might be thinking, and I've been saying that, oh, look at the quant indicators, they're indicating that there should be some bit of a pullback. But chartists are making merry, and there is strength on the index. Yesterday too, 104 points risen from the day's low, which is exhibiting continued momentum. Tech is sulking, but all the recent notes point towards possibility of value buying in large cap technology. Now, with yields moving up, you don't know that play gets disrupted. But if the yields were to move down from 2.9, then rest assured there is value in large cap technology, as you hear all brokerage notes speak about as well. And as you can see the valuations yourself, if not in TCS, then some of the others for sure. So let's wait and watch if that kind of supports the index. But to my mind, the two indices or the two sectors that people should definitely watch out for: capital goods and real estate. A lot of momentum, a lot of buying, a lot of fundamental a strong performance done in quarter 4 and quarter 1. So quite out there. The key is, viewers, is the IPO market back in action. It might be too soon to say that, and because it's only one IPO which has seen a really good traction, which is Surma SGS, but which had a very good um, response, which closed yesterday. So therefore, the question is, would IPO markets be back? You could argue that maybe they are, but let's wait and watch. We'll have an interesting conversation today with Dharmesh Mehta of DAM Capital, who's probably one of the premier iBankers in the country, on what does he make of the response that they've gotten, and what does it indicate for the rest of the um, IPO market as well. It will be interesting to see that. Um, what about FI sold yesterday? So a bit of a deviation, like I said, from what's happening normally. And I was reading a note from Omkara Capital, which spoke about this, that, yeah, FIs continue to reduce the positions on index futures as well as stock futures as well. And that should be something that people should keep in mind as well. The net stock future positions are lowest since 27 July when it was 4.85 lakh contracts versus today's 3.94 lakh contracts. So keep that in mind. Anyways, so next, long story short, it's a quiet day of trade today. I took 5 minutes to tell you that. I could have finished it in one sentence, if you will. Let's take stock of the stock specific ideas that people should keep in mind. Oil and gas names, difficult to figure out how big a reaction, if at all, but the government has hiked the windfall profit tax on diesel to 7 rupees from 5 rupees. Also brought 2 rupees per litre tax on ATF exports after scrapping it in the last review. And tax on domestically produced crude oil has been cut to 13,000 per ton from 17 and 750 per ton. So therefore, do watch out for this. It's negative for RIL, positive for ONGC and OIL, but let's wait and watch if there is indeed any big reaction there or no. Because then some other stocks, and then I want to talk a bit about IEX, but before that, some other stocks. So Sun Pharma, FDA's issued Form 483 with 6 observations to the company after the Mohali plant visit, and therefore Sun Pharma should be in focus today. We don't know the nature of the observations, so can't really comment on how big a negative, if at all, this is, but the stock may react. So you should know why the stock is reacting, so watch out for that. Watch out for Max Healthcare. HDFC Asset Management has said that its stake has increased to 5.18%. We showed Sun Pharma, right? I think we did. But yeah, watch out for that Sun Pharma piece of news as well. Metropolis, CEO Vijender Singh, company says that CEO Vijender Singh has resigned and companies begin the process of finding a CEO. I just want to lay a caveat out here. Now, maybe the official release came yesterday, but I mean, I and a lot of the people have known this news because when Metropolis, Ameera Shah spoke to us a week or 10 days back, I quizzed her about this very development in the interview. So, including me, a lot of people knew this. And therefore, for a lot of people, this may not be a negative surprise per se because it was well known, so to say. But there's an exchange release and therefore we need to bring it to you. I just want to lay out the caveat here. Maybe the stock reacts negatively, but to my mind, this news was well discovered and well known. So please keep that at the back of your mind. I have to bring it up. We have to put it on all you need to know copy simply because the exchange release has happened right now. Just keep this at the back of your mind. Wipro's gotten a multi-year IT services contract from UK Treasury. So who knows, maybe it reacts a little bit. I'll watch out for IEX because, again, the news about states, 13 odd states not being given access to buying power on the exchange came in during market hours yesterday. Even if the official news didn't come out, a whiff of this news was circulated across media platforms. So in some sense, IEX reacted negatively yesterday any which ways. Maybe there could be a further negative reaction. The caveat that I want to lay out here is that I'm sure these states don't want power outages, right? At a point of time when manufacturing activities that is starting to pick up. Yes, you could argue that in the monsoons, it may be a bit here, but manufacturing doesn't get impacted as much. So I'm sure these issues will get resolved. So this is not a permanent loss. Yes, it's business. If indeed it's business loss, it's not a business that can be recouped materially later on, but it's not a perma loss is what the point I'm trying to make. So yes, IEX could have a negative reaction, should have a negative reaction, ideally so. But let's wait and watch. All I'm saying is this news was known yesterday. So please keep that at the back of your mind. What else? Yeah, I mean, I'll keep on watching out for capital good names. Like we said day before yesterday, Jefferies, yesterday Credit Suisse. Today, one more note. I think MK or somebody else has come out with a note, very positive and constructive on cap good names. That stock, that space remains in focus. Thermax, ABB, Cummins, L&T, which led the rally yesterday. So do watch out for those. Some fairly high delivery-based buying seen in companies like KPIT, Oberoi, and IIFL Finance. IIFL Finance might have a block today. So do watch out for all of these in the session. But more importantly, it's a Friday. Actually, sorry, before we wrap up, watch out for the Greed and Fear view, Chris Wood's view on oil and gas. They're saying that while Greed and Fear is not predicting a new world war, current developments are. What anyone with remotest knowledge of European history will understand exactly what should be expected to happen in Iraq to a conflict, to a new world war. He says these mounting geopolitical risks are the reason to maintain exposure to the likes of energy and gold, even if, in the case of oil, the demand supply situation was not so critical. Chris Wood is saying that there are telltale signs that we're in the throes of a third world war. Well, one hopes it doesn't happen. It's destruction to life and property, let alone what happens to markets. But Chris Wood is a learned fellow, so you pay heed to what he's trying to say. We had an interaction with Jitu Punjabi of EM Capital Advisors, who's amongst the largest global asset managers at a point of time hailing out of India. He's also of the opinion that we will have a large global conflict at some point of time in the next 3 to 5 years. Well, one only hopes it doesn't happen quite that way. Um, that's the sad part of the news. The happy part of the news before we wrap up, that one, it's Friday, a run up to the weekend. Two, it's Janmashtami, and it's a big day for a lot of Krishna Bhagwan Bhakt. So to all of you, happy Janmashtami as well, and have a safe day, everybody. I'll see you with the trade setup on Monday morning.